Hi, we are looking at the EURCHF monthly chart, and this is the weekend before the markets open on Monday, 29th of April 2013. This pair is a pair that I believe will give huge profits to those who keep an eye on it. I chose to start showing you the monthly chart because I wanted you to see this huge reversal here, this move here. Remember that each candlestick represents a month's move, price movement, and this is the MACD, and this is the histogram. A tremendously big bearish histogram, which is now starting. It started after this move to decrease its bearish momentum, and that means that bullish momentum is being built up. Also, the signal line jumped out of it at this point, and then the uptrend started. Why did I choose this pair at this moment? Because I believe that although here we see that price is below the 200 EMA, exponential moving average, which is a filter very popular to a majority of traders, and also price is below 65 EMA, a very effective trading criterion, which triggers entries, and reasonably on the monthly chart we should enter long only once price jumps upon 65 EMA, when price jumps over it. But I wanted to show you how this pair is able to give us excellent trade setups once our conditions are met. So if we go to the weekly chart, we see that price just jumped above 65 EMA. The histogram, the MACD histogram, just went bullish. That shows that market bullish momentum is gradually increasing. Not at these huge levels, but still something starts to change. And since we had all this side movement for so long, for so many weeks, that means that we should expect a huge boom. We should expect a huge breakout. So that's what I'm going to be ready for. Are our conditions met here? No, because we want the 5, 10, and 15 EMAs represented by the yellow, magenta, and dodger blue lines to have a bullish crossover and then rearrange themselves in the proper bullish order, like this one. The yellow must be below price, then the magenta under the yellow, and the dodger blue under the magenta. 5, 10, 15 EMAs. They are not. This is not the case here. This hasn't happened yet here. Let's go to the daily chart and see. So on the daily chart, we see a picture which is much closer to the ideal of a good entry point. So what do we have here? First, we have the price moved above the 65 EMA, which is our main criterion. That's the first bullish signal. Is this enough for us to enter long? No, it's not enough. Do we have a crossover, a bullish crossover of the 3 EMAs, 5, 10, and 15? Yes, we had it. Did they rearrange themselves in proper bullish order after the crossover? Yes, they have. Yellow, magenta, dodger blue. 5, 10, 15 EMAs, one below the other as they should be. Great, and 200 EMA is below price. So yes, we have bullish sentiment, market sentiment here. Do we have the histogram above the zero line? Yes, it is above the zero line. And where is the signal line of MACD? The signal line that this blue line is ready to touch the histogram and start running upwards inside it, which is very good filter, very good signal for entering long. Yes, we can enter long here if our account can take the risk, which will be between our entry point. We will enter long as soon as markets open. There may be a gap upwards or downwards, but we can't precisely predict the gap, but we can enter long and we can put our stop a few pips below 65 EMA. Ideally, we should put our stop as many pips below 65 EMA, the white line, as the half of the biggest candlestick among the 10 last ones. The 10 last candlesticks are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The biggest is this one. Half of its size is the number of pips. So this number of pips below 65 EMA is where we will put our stop. If the distance between our stop and our entry point is more than 3% of our account's equity, we will not take this trade. We will go to a smaller time frame looking for a smaller risk to take. Is there a possibility to enter in a smaller time frame? Of course there is. Don't push yourself to take decisions which might kill your account. Don't do that. For all the possible profits in the world, don't do that. So if we are okay, we enter here on the daily chart. That would be a great trade. If we are not okay with the risk we should take, according to our system's rules, then we go to the H4 chart. And what do we see here? Here we see that we had our conditions met long ago. We could have entered long at this point here, where the price had jumped above the 65 EMA. We had a crossover, bullish crossover of the three EMAs, 5, 10, and 15, and then they were rearranged in proper bullish order. 5 below price, 10 below 5, and 15 below 10. And we could have entered here. But since we missed that point, okay, we can try to see if right now where we are standing is a good point for us to enter. It looks like we had a corrective downward move, and now we are about to have an upward move. We will wait. The price is above 65 EMA, so that's fine. We will wait for the 5, 10, and 15 EMAs to complete their bullish crossover, to have a bullish crossover, and after the crossover to rearrange themselves in a proper bullish order like this. And the moment they are rearranged in a proper bullish order, we will enter long. We will enter long, and we will put our stop below 65 EMA. Half the pips of the range, of the total range of the biggest candlestick among the 10 last. Let's say that we can enter in this candlestick. Our conditions were were met in this candlestick, and we had already the bullish crossover of the three EMAs and then rearrangement of their positions in a bullish order. Let's assume that this already happened. So where should we put the stop? We should put the stop 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candlesticks. These are the 10 last candlesticks. The bigger one is this. We calculate the total pips of the range of this candlestick, and the half is here, so we calculate how many pips it is, and this is how many pips below 65 EMA we should put our stop. Again, if our entry point is here and our stop loss is here, this is the distance of a number of pips which constitutes our risk. Our risk must not exceed 3% of our account's equity. If it does, then we should go to a smaller time frame and work our way from there. Yes, there will be a chance for us to enter long on the 1 hour chart. We must be patient. We must wait for the price to jump above the 65 EMA here, and we must wait for the 3 EMAs to have a bullish crossover and then get rearranged in a proper bullish order. Don't jump prematurely in the trade. We must wait for the histogram to become positive, to become bullish and go above zero line. This is the zero line of MACD. It is not necessary for us to wait for the signal line to start running upwards inside the histogram, as long as it is somewhere here ready to start touching the histogram and start running upwards. Okay, so we have to wait a few hours for this to happen on the H1 chart. And we will do that only because our account can tolerate the risk on the higher time frames. Let's suppose that we can tolerate the risk at higher time frames, so we will wait, and then we will have an ideal setup on the H1 chart, and we will put our stop the way we discussed, below 65 EMA, half of the range of the biggest candlestick among the latest 10, and we will enter a very, very nice trade. And hopefully the system I presented will help you enter in a bullish breakout, which will give you a lot of money. Thanks for watching.